This is Breaking the Mould, our regular market review with Investment Director Russ Mould. Russ, how are you?
Very well, Clara. How are you?
Not too bad
Good.
all. Russ, it's another week. What's the fuss?
Okay, well, I don't want to be too crude about it, if you'll pardon the expression, but the fuss in the next 2 weeks is all going to be about oil. The markets are still digesting the full implications of the OPEC meeting that took place in Vienna on the 27th of November, but we've got 3 companies coming up with statements or results, and all of their fortunes can be heavily influenced by the price of the black stuff, namely Wood, Ashtead and Merlin Entertainments.
Okay, let's start with Wood Group, because I'm guessing that's the most direct play.
Yeah, easy. It's a perfectly sensible place to start. I mean, it's actually quite a complex company. It's based in Aberdeen, but has operations in 50 different countries, and it's exposed to upstream oil exploration, downstream oil refining, onshore, offshore, also player in the power and turbine markets. So it's not an entirely straightforward story, but stock markets can be very, very simple creatures, love a nice, easy narrative, and looking at the chart behind us here, which shows Wood's share price against the oil price, yeah, that's a pretty simple story. Even the thickest trader could get that one, I think.
Yeah, it all seems pretty open and shut.
It does, but as with ever, the reality is not actually quite that simple. But it's easy to understand why the market is thinking in these terms. Oil price down means oil companies' profits down, means less cash, means less spending, means less investment in the projects that Wood specialises in. So there is a logic to it. On top of that, lots of the big oil majors are under pressure from their shareholders to be more disciplined with their cash, not spray it around like it's confetti on projects willy-nilly, so they can maintain or increase dividends for shareholders. And that is definitely creating some pressure. Petrofac popped out a massive profit warning at the end of November. Norwegian peer Seadrill has actually just cancelled all of its dividend payments, and this weak oil price is clearly weighing on Wood and all of its peer group. As you can see from the second chart behind us, the share price trend's pretty clear. Now, to offset that, Wood actually came out with a trading statement on the 9th of November that was fine, thank you very much. So let's see what they say with this next statement on Wednesday the 11th, Thursday the 11th, I think, actually, of December. So they will no doubt be trying to offer reassurance again. And in addition, share price down does mean a lot of bad news is already priced in, and there is some M&A creeping into the sector as with the oil equipment sector. Halliburton's just bid for Baker Hughes, and Technip of France has just bid for Countryman and seismic surveyor CGG. So that could also provide some fresh interest in what is quite a depressed sector.
Yeah, you mentioned shale earlier. Hasn't that been a big boost for Ashtead as well?
Yeah, shale has been brilliant for Wood. It's also been even better for Ashtead, I think it's fair to say. In that, Ashtead, it's a FTSE 100 firm. It's a rental equipment specialist. So it's not an oil equipment specialist like Wood is. Anything to do with digging, drilling, powering, heating, you can get it from Ashtead, basically, on a leased basis. And Ashtead's biggest growth area for a while has been shale oil and gas in America. Now, I know fracking is extremely controversial, but it's a huge boom industry in the States. Cheap energy is a big part of America's economic recovery right now, and Ashtead's right in the thick of that. Actually, its first quarter numbers were so good, they were a record for the company, 120 million quid, and management actually raised its profit forecast for the year. Now, this is an interim statement coming up from Ashtead on the 10th, Wednesday the 10th, the day before Wood, and we're looking for the full year for pre-tax profits of around 454 million quid, a 27% increase. One assumes the first halves will set the company on its way. I think that's what the market's expecting.
Okay, Russ, I totally get how the oil price can affect Ashtead and Wood, but what about the third company that you mentioned, Merlin?
Oil, waxworks, Madame Tussauds? All right, bit tenuous, that's not the real link, I promise. Merlin does own and operate Madame Tussauds. It also operates Chessington, it operates Alton Towers, and in fact is the world's second biggest theme park operator behind the Mickey Mouse Company, Walt Disney. It also operates Legoland in the UK, Europe, Asia and America. So the theory is oil price down, petrol price down, more money in people's pockets so they can have a treat weekend at a theme park. It's as simple as that. Whether that's going to work or not, we'll see. But so far, you've already had some good numbers from Merlin this year. They put out a statement in September, I think, that showed 6.7% like-for-like growth, 13.8% growth at the Legoland sites, helped, I guess, by the movie. And so let's see what their statement on Tuesday, the 2nd of December is like. It's a full-year statement. Market consensus for sales of around 1.2 billion, pre-tax profit of 236 million quid, and a dividend of 6p.
So it's a whole lot of money.
A lot of Lego as well, all things being equal.
Yeah, and a whole lot of Lego. Thank
you, Russ. A lot of Lego, thank you.
That was Breaking the Mould. We'll be back with another edition very soon. Until then, take care. Goodbye.